Return on invested capital. Any business that you're going to invest in, you're going to be concerned about the return on invested capital. And assuming that you're in the business for, or you're investing in the stock, whatever the case may be, for more than a few days or a few months, the company is probably going to take on some capital project, which means you're going to have to ask yourself, is this project the best thing that the business can do? Today I'm going to use this feedlot as an example of a capital project that has been undertaken by a business. Now, we're going to assume that this is the best use of the land, money, all the different resources here, and move on to the second question, which is actually a series of questions about the project in terms of its return on investment. Obviously, we have to consider the cost of the project. We have to consider the life of the project in terms of we're going to complete it in a year and it's going to exist for the next 60 years, whatever the case may be. What are we going to incur in terms of borrowing costs for the project? What type of maintenance are we going to have to do on the project after it's complete? And ultimately, we have to ask ourselves, what is the return that we should expect on this project, whether it's monthly, annually, whatever time frame you want to stick to. Behind me, the feedlot here, capital intensive project. You have to prepare the land, you have to build the infrastructure for the feedlot to exist, you have to find either you're buying the cattle or you're finding somebody that wants to rent out the space. A number of factors have to be considered before you actually take on the project, and in terms of the cattle or renting out the feedlot space, what's the return in terms of, or compared to, the cost that it's going to take to build this project out. When you're looking at a project, you want to think about that lifetime of the project, because really, the longer the lifetime, the longer you have to make that return on investment. If the project has a short life and a high cost, well, then you're going to have a high percentage return on that project to make it worthwhile. In terms of the feedlot behind us, you can guess, this project has a very long lifetime. Of course, you're going to have maintenance costs to it, but in terms of the actual structure in total, it can live on for, I would say, 60, you can go on in perpetuity for this thing, as long as you're not destroying it with, overrunning with cattle. And that matters, because as an investor, you want to know, how long is this project going to bring me X return for? Because the longer it can do that, that initial outlay, that initial cost that's going to be a burden for the company is going to look not so much as a burden, but as a great investment. So when you're looking at or you're hearing about a company taking on a project, consider the life of that project. How long is this going to be good for? And depending on that, how long is or how much return on investment is expected to see annually. And if the life of the project, let's say the life of the project is 20 years and there's a certain cost to it, I'd break the cost down over that lifetime and then see, in relationship to that, is this on an annual basis bringing in more or less than that divided value of the project. So you're not setting up the project in terms of, okay, we're spending X dollars in the first year of this project and it's bringing X dollars in the next year. No, you're spending X dollars for the next 20 years of the project and then looking at return per year on the project. So that can give you a sense over the lifetime of the project how the project will have a return on the investment. Ultimately, when you're looking at this, you don't want to look at it as a lump sum. You want to look at it in terms of the entire scope and the lifetime of the project. So, in terms of this feedlot, it's going to last for, let's say, 60 years. Each year it's going to bring in X amount of dollars. Well, how much did it originally cost to build? And over the lifetime, what is that in terms of annual costs to me, the investor? And lastly, taking into maintenance costs, because nothing, like I said before, is going to exist without some type of cost to keep it in a good or desirable shape so that it can function throughout its lifetime. Again, these are the things you have to consider in terms of return on capital. Obviously, you want to look at that annual cost per year in terms of the lifetime of the project and the return on investment that you can expect annually in terms of the project as well. Ultimately, the first question must be answered, which is this the best use of funds? And if so, go on to those next questions in terms of cost, what you're giving up, what you should expect, and what it's going to take to maintain this project throughout its life.